Hopefully you guys can see me, can hear me. Well, not can see me, but can hear me. Please, somebody write in the question sections that you hear me. Whoever is here, I don't see any subscribers yet. I mean, any viewers. Okay. Can anybody who is watching right now write in the questions if you guys can hear me well, please? I'd really appreciate that. Oh, cool. Akioda, thank you so much. All right, so let's give some time to our applicants. So it's only 4 viewers right now. We got about how many? 12, I think. 12 players actively participating in this trading competition. So let's just wait for them. I would like to thank all of you for participating in this. I hope you enjoyed it. And today, the purpose of today's webinar, it's going to be hopefully short, and I don't want to talk as much as just talking. I would like to answer questions if you guys have any, and I would really like just to share your feedback about this competition. Encourage you to participate a little bit more in the Facebook group, and the goal is to start changing this competition from just sporadic trading, which is probably taking place right now amongst most of you, into more systematic trading where we can actually teach you something. The purpose of this internship, of the trading internship, is to make sure that we convert you and your knowledge into something solid that you can later use for your personal trading or for your trading for a bank or trading for a hedge fund. Obviously, or prop shop. Obviously, the hedge fund trading and bank trading is and prop shop trading are three different things. When we're talking about trading, there's a there's trading for a client, and there's a proprietary trading. Trading for a client usually takes place in the banks, and after Dodd-Frank, many banks do not have any prop trading whatsoever, or something very little. For the most part, banks just have trading for a client. Now, when it comes down to hedge funds, traders at hedge funds usually execute orders of PMs, portfolio managers. So they do have a say in terms of how to execute the trade. However, they don't really have a say in terms of the direction of the trade usually, unless they're also PMs and traders simultaneously. However, trading at prop shops is more of what we do right now. It's probably the closest resemblance. And trading a prop shop is, just trading anything you want, whether it's stocks, futures, commodities, fixed income, whatever you want, in order to get and what's the best word for that? In order to get very high returns, abnormal returns with sufficient level of risk reward, right? So we are trying to do the prop shop trading here, kind of, right? It's very, very similar. However, I would still like here at Brooklyn Risk Advisors, we still like to start giving you guys a little bit more structure in terms of how you should be trading, in terms of what strategies to use, not just sporadic, but something actually solid. So what we're going to do is a couple of things that I would like to tell you is 3 steps. Very soon, probably tonight or tomorrow, we're gonna send you Excel spreadsheet. It's probably going to be Google Doc. So we're going to just give you access to the Google Doc so you can edit it. Where we would like you to put all your trades so far. You'll put all your trades in a chronological order with entry, exit, prices, and timing. So you could start analyzing yourself, and we could start analyzing you. That's one. Secondly, very, very soon we will start testing your strategies. And if you guys have no strategies, then we'll start teaching you strategies. Now, to create a trading strategy, you need to have a couple of things. It's usually enter, exit, rules of specifically when to enter, specifically when to exit the trade, and obviously analysis, where you would include Sharpe ratio and average return. as probably two leading indicators. Sharpe ratio is probably the top one, which is a ratio of your return versus your risk. So you can make whatever return. However, if it's super risky, then it's going to be super hard for you to find investments. Even if you make 100% a year with a Sharpe ratio of below 1, it might be very hard for you to get some institutional investors under your belt, because they do value risk reward way better. They do value reward the adjustment to the risk. So that's number two. And number three, very soon, probably again this week, we will start asking you guys to post your forecasts for every stock you're trading for the entire day, from open to close, based on the historical return, based on the historical analysis. So based on the historical analysis, you will make open close forecast for a given day, and based on the forecast, you'll be putting certain trades throughout the day. So those are the three things that are coming very soon. As a reminder, around the end of this week, Thursday, Friday, we will start giving out, probably, we'll start giving out some internships, the actual positions, especially to those most dedicated ones of you. And we will be looking not only at the return. In fact, return is important, but it's not the only factor. So even if you are in the top three based on the competition, does not guarantee you get an internship. We're still thinking about it. We're still thinking about how to do that best. But as one of the features, you definitely need to know how to test strategies. So you need to know at least Excel. The best idea will be to know VBA or Python. VBA does not handle too much data. All of us know that. So probably Python is the best language for trading when it's not about high frequency. High frequency, the best language is obviously C++ because it's faster. MATLAB is a great language. It's really competing against Python, but Python is getting the leading role right now on Wall Street as one of the leading languages because of so many libraries and so many different opportunities to make trades. To conduct backtesting analysis. So I have the VBA or Python. Obviously, if you have any other language, it's up to you. It doesn't really matter. The way how to use how to backtest your strategy will be just to do it using open close high low prices that you can find on Yahoo Finance, Google Finance, Amazon Money, Bloomberg, wherever you go. All those public resources have all the information you need for your strategies. So we'd like you to start testing those strategies. We'll be also to the most proactive ones of you, we will be given strategies of our own to test. So you could also use that in your personal trading as part of this competition. Now, throughout the entire internship, you will still have to trade. You will still have to trade actively. Plus, you'll have to backtest your strategies. And again, to the most proactive of you, you also have to test our strategies by and improve your both coding and trading skills. I'm done, really, at this point of time. I just wanted to make this announcement. I just want to ask your feedback. So for the next, how much time we have? For the next 15, 20, 30 minutes, let me just answer your questions, whatever you have. Give me your feedback if you like the competition. If you, thank you, Andrew, for that question. If you like the competition, what can be improved? What you like, what you don't like. Any feedback, any questions you have, please shoot. Whether it's about this competition, or about trading in general, or about your trading strategy that we have to develop very soon. I'm just waiting for the questions right now. Couple of more minutes, maybe until you guys, finally here, because there's a 2-minute delay, I think, of our webinar and what you guys see on YouTube. Okay. So Akioto asked, "Hey, I just wanted to know what is the minimum amount of time is expected to remain in a trade?" There's no real minimum. Obviously, um, the purpose of this competition and the purpose of trading and the purpose of you guys trading is, and you probably realize by now, if you analyzed your trades carefully. If not, you will see commission is about $10 in, $10 out on MarketWatch. If you go for any leading brokerage firm, including Interactive Brokers, TradeStation, any of those, you'll be charged anywhere from $7 to $10 in out. Interactive Brokers is a little bit cheaper because it does cents, pennies per share, but overall it still turns out to be almost the same, like around $5 plus per per each trade. So I mean, if you're trading big amounts of money, obviously. So you have to realize that when you enter the trade, not entering the trade because you enter the trade. You enter in the trade because you have a certain game plan in mind based on your strategy. You have certain, again, entry and exit points in mind, with certain sharp ratio and average return in mind, and you have a specific goal of where and how you want to execute this trade and when you want to exit it. And all that stuff, in theory, should be written in your trading journal. If you have it, if you not have it, just going to be in your, somewhere in your Excel spreadsheet, which will help you drastically to stick to your plan. Sometimes you also need to use intuition. In fact, the top traders that I know, top traders that have net worth of not $1 million and not 10 millions of dollars, but $50+ million. These guys use a lot of intuition as well, coupled with the technical knowledge that they don't necessarily have themselves, but the technical knowledge from the analysis prepared by the associates, by their analysts. So that's what's going on right now. So there's no minimum time to remain in a trade, but if every single trade that you make is under 5 minutes, chances that you don't know what are you doing at all. You just have no clue, and that's not good. So again, some trades, if your price target is 2% and you can reach the price target in 2 minutes, especially on the open, boom, done, out. However, if your price target is 2% and you in out of the trade just because you want to keep the profits for the day, then it's not a good thing to do. Again, this is virtual account, so you have to really explore it. Andrew McCall, I believe you said originally there would be 20 internship offers with only 12 people left in the competition. How many do you expect to be given out now? So we are going to get more interns, chances are. We are publishing additional posts. So if you have any colleagues or friends of yours who would like to participate in this competition as well as a selection process, please do ask them to join. We are going to be publishing those new posts probably this week. In fact, we did one for I believe NYU. Our team did it just recently, maybe even today. I'm not sure. Again, that's not my responsibility, but that's from what I overheard. So it's 12 people left, but ideally we'd like to have a team of 20 interns trading in and out the entire summer, and hopefully move to the fall semester as well. And hopefully this internship can help you drastically to actually improve your careers and make you better traders. So at this point of time, it's all under. We're still thinking about it, basically. Okay, Kai, not about the competition, but MarketWatch is really buggy. I had to put an order for FCX this morning 7 times before it registered. This has happened multiple times in the past. I'm not sure if this is just me or if this is an actual problem. So we are holding a very similar competition for one of the developing nations. It's the country is called Belarus, and we've been holding a very similar competition for them over the course of about 3 months. We started with, I think, about 50 people, and only 7 people are left right now after whatever 2-3 months. So Well, the thing that they do, they're good at. They do participate in the local Facebook group, specifically designed for their competition, and all these buggy questions and stuff are always raised in the group, so everybody else is aware of it. I'm aware that MarketWatch is buggy. Unfortunately, it is. However, that's the best source we have because it is a source of real time, almost, or I'd say like super close to the real time quotes. It is buggy. Um, but there's also one more thing. FCX is trading on the NYSE, New York Stock Exchange. If you're planning to open the trade at 9:30, chances are you're not going to get closed. The reason why is this: Nasdaq stocks, and how to know whether it's NYSE or Nasdaq. NYSE stocks usually have three symbols in it. So FCX is three symbols. Uh, for the most part, I'd say 90% of the cases, if you take any stock with three symbols or less, it's going to be New York Stock Exchange. If you take signals of four, ticker with four symbols or more, it's probably going to be Nasdaq. Nasdaq is all electronic, so it actually opens up at 9:30 sharp, and then whatever happens, happens, right? Now, NYSE is done a little bit more manually. It's not electronic. There are algos, but it's not done electronically. So the opening might take place not at 9:30, but 9:31, 9:32, even 9:33. Same thing on the close. It doesn't always close at 4 p.m. It might close at 4 5 p.m. Even certain stocks like Disney, stuff like that. So the reason why you might not be able to open trades on MarketWatch if it's before 9:33 might be because the stock is just not open yet, because it's not officially open yet. But if it's after like 9:32, 9:33, then you should be able to open it. And if not, just keep reopening it. Keep reopening it, even if you don't get the best price, because at this point of time, it's really about. It's not really that much about the return. It's more about the strategy you have. It's more about you being systematic while executing trades and using your intuition when necessary, when when you need it. Because always being systematic is also not the best option, in my opinion. John Zhang, is there a way we can create stop loss command in the competition? I'm not be able to be in front of the screen all the time, and lots of time when I get back, loss is 4.5% because of the volatility. Yes, John, that's the thing. That's exactly why there is an option to do the stop loss, but we remove that option in order you guys to be able to set mental stop losses yourselves, and so you guys can control yourself better. So we did this on purpose. There are going to be no ways to set up actual stop losses in the future as well. Just going to be all mental stops. But good question. Sihan, the competition is a good way to get some sense of the trading. However, the actual price we pay when trading the real money is different from the real-time data because of the spreads. A handful of times, traders enter and exit quickly with 0.01 difference, trying to get the small amount of minimum risk profits. I wonder whether this kind of strategy is practical when trading the real world. For a handful of times, traders enter and exit quickly with 0.01 difference. That is true when you're dealing with high frequency guys, and high frequency guys have to get a spot on the stock exchange so that they don't pay much commission. And then 0.01 difference will make sense. However, 0.01 difference, meaning 1 cent difference, is only cool when you are trading lots of like millions of dollars. And think of how many stocks can be not influenced by trading $1 million. I mean, $1 million, nobody sees you, nobody really knows who you are. Like $1 million, you're nothing. Right? You're not moving the stock, but you can move certain stocks, even the ones that are more tradable. So it's not necessarily the so it's not necessarily the stocks. It's also the style. All right, so let's go next. What are the next questions we have? So for this competition, trading 1 cent is not going to be worthwhile. Thank you, Peter. Do you know why sometimes our orders will be canceled by the MarketWatch website? Just bugs of the MarketWatch. In fact, Every single time you're going to be starting new, like every 2 or 3 weeks, we're going to be starting a new competition, just so everyone's fresh and it's easier. We are going to be giving you guys like whatever 25 grand or $100,000 virtual money to trade, and you will see that for the first uh, a couple of hours you're not going to be able to see the ranking because of the Market Watch. So Market Watch again is not the best platform, but it's free and it's the best we have. That's the best we have. Kyoto, will we be getting individual feedback on our trade so far, or are we going to self-evaluate based upon the Excel spreadsheet? The Excel spreadsheet conducted by Sihan right now, it's great. It's not it's not explanatory of anything, and we're definitely going to be doing some analysis there by you guys. And whenever we finish the preparation of the Google Doc, where you guys can put all your trades, you'll be able to really see how you're doing. You'll be able to see maybe which trades are your strongest trades, which trades are not your strongest trades, and adjust your trading strategies specifically. Again, the question is not about making money. The question is not about sporadic trading as much as it's about the systematic trading. Okay, so far so good. No other questions we got at this point. Let me see. And also, we will be probably selecting very soon, again, a couple of most proactive ones of you who would help us with our strategies. Our strategies are going to be done in Python. They are already done. I mean, the platform is already there. We already have coders who work with us on this. These coders are from Belarus. They are great coders. And we are going to be somehow trying to merge two teams. So probably next week we're gonna invite all the people from Belarus, all the players from Belarus to the to your game, and it's gonna be well, it's not gonna be like an international competition, but it's definitely gonna have a sense of it. Of great engineers from Belarus versus financiers, engineers, math people, finance people from the United States. Okay, more questions? Again, today I just wanted to give that feedback. I just wanted to give you the what are the next steps. So Excel spreadsheet trading, Excel spreadsheets we'll try to prepare tonight, tomorrow. Trading strategy, where you need to test it and present it to us. The Sharpe ratio has to be above 1, historical Sharpe ratio over the course of the last 5 years, and then you will also have to start posting your forecasts for every single stock from open to close based on the strategy. If you have no strategy, do not put the forecast, but you have to put you have to put the forecasts every day. We will tell you when it's going to start. It's probably going to start around Thursday, Friday, whenever the strategies are going to be prepared. All right, so I think there are no more questions at this point of time. Thank you again. Thank you so much for your participation. We really value your time. We really value the fact that you do follow all the rules. The reason why we ask to follow the rules is because that, again, creates a certain system which helps you get the highest results possible from trading and also training yourself on that. So thank you so much. If you guys have any questions, please ask them in the Facebook group. Don't be shy. Don't hesitate to do that. Please try to make that group a little bit more personable, so you guys can actually participate there. Be nice to everybody, of course, please. Be nice and professional at the same time, yet try to make it a little bit more personal, because we're really trying to teach you guys a little bit. And the best learning experience is when you guys, when you guys don't treat this as too professional, but rather treat it as, as a friendly gig. But stay professional. So still talk to each other in a professional manner. Friendly, professional manner. Last attempt for me to check the questions. No questions. Thank you so much. I will talk to you guys through Facebook tomorrow, and have a great trading. Bye bye.